guys, how are you out there? I hope everybody is finding this Tuesday pleasant, finding you all well. To those of you who are in Texas, hoping your recovery is going well. And we're here today to talk about your retirement. We're here to talk about understanding the difference between good and bad debt. And I am a strategic wealth specialist. As you can see, we are SWAT, Strategic Wealth Accumulation Tactics. What I do is I help people to, one, understand their debt, and two, I show you how to literally turn your debt into tax-free retirement for your future, for your families. So let me ask you this question. Are you 100% sure that you have a great retirement? Or do you have doubts? Because here's the thing. We used to go to work. We'd retire 62, 64 years old. We would have a retirement. We would live 6 to 8 years, maybe, go out, fill our bucket list, and die. Doesn't work like that anymore. We are a society who is outliving our money, and we are living much longer lives, and we're living much more active lives after retirement. And active lives, or any life, costs money, especially today. And as you get older, it's going to cost more. So let's talk about that. If you're planning to retire at 65 years old and you're planting your money in a 401k, understand that it's a great option. But here's the thing: a 401k has a lot of risk. Don't know if you're around in 2008, but it's risky. But it's also very highly taxed when it comes time for you wanting your money. So let's say you've saved $100,000 for your retirement. You can just assume right off the bat, without any other risk factors, that that's $75,000. Today's day and age, that's not going to last very long. It's not going to make for a great retirement. Every day I'm talking to people who are in their 70s and they have mortgages and they're working to make ends meet. So let's talk about our journey through life. Our journey through life is we go to school. We spend 12 years in school. We don't learn about checkbooks. We don't learn about compound interest. We don't learn about how to take care of our children or be in relationships or what life really means. And so we come out and we get all excited and we go to school, we get a job, and we get our first credit card. And guess what? We go out, we spend our first $1,000 and we start making those minimum payments, which is just a few dollars over that interest. And now $1,000 purchase is a $1,200, a $1,400, a $1,500 purchase moving forward. And something that should have been, in any reasonable situation, something you could pay off rather quickly, can end up being a 5-year debt and cost you thousands of dollars. So my goal is to show you how to, one, if you have that, eliminate it, and two, how to be in a position where you never have to worry about doing that again. So let's talk about how to create your own bank. First let's talk about compound interest. So compound interest, as stated by Albert Einstein, is the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. And we are a society of indebtedness. The average family today is in debt over $275,000, and a lot of that is homes as well. But the thing about a home, let's talk about a home. This is a good investment. This is what we call good debt in a sense. But when you get a 30-year loan and you fight so hard for that 5% interest rate or lower today, you don't pay that 5% interest rate until year 30. We don't stay in homes 30 years anymore. We upgrade, we move, we retire, we get relocated, our families grow. And the average family today stays in any given home about 7 years. However, about year 3, you start getting your door pounded down because the finance companies want you to refi. And they promise you all of this wonderful savings and, we're going to reduce your costs and we're going to save you $100 a month. The problem is that year 1 through 10, you pay on average, and I challenge anybody out there who has a mortgage statement to take a look but you're paying somewhere between 76 and 78% interest year 1 through 10 on your loan. Okay, because they're going to get theirs first. So at year 3, if you haven't already refied or you're not heading out to buy something new or bigger, they're pounding down your door. And the reason for this is because they're starting that clock over. It's a constantly inflating their bank accounts on our hard-earned dollar. So I don't know about you, but I got tired of eating ramen, whether eating lobster, off my money. I work hard for my money. So I felt super excited when I got to learn how to show people to spin that debt to gold. All right. So the average, we already talked about the average household. The average household, $250,000. So what if I could show you how to pay off your home? Let's just say you have a home. What if I could show you how to pay off that home in half the time or less? Maybe even 9 years or less, even if you just bought it. Wouldn't that be phenomenal? Because here's what happens when that happens. You have all the interest you're scheduled to pay, hundreds of thousands of dollars in interest. Oftentimes, your interest over a 30-year loan will equal or exceed the actual loan itself. So if we save that interest for you, it's money back in your pocket, right? Yes. And if we pay off that home, it now becomes part of your financial legacy, it becomes part of your retirement, and it becomes an asset, right? And this is about creating assets. This is about creating financial legacies. That's what I'm all about. I want families to be able to go out and work hard for their money and see the benefit of that, have a higher quality life as a result of their hard work. So can you imagine? You have all this debt. You might have student loan, you might have credit cards. Most people have an auto loan or 2 or 3, right? And then they have a mortgage. So what if we can eliminate all that? What if we could pay off your cars? Do you have a 7-year loan? Do you have a 5-year loan on your most recent purchase of a vehicle? What if we could pay that off in 2 years? What if we could eliminate all of your consumer debt in 24 months, saving all that interest and applying that payment that you're making on those back into your bank and allowing you to pay off that house much, much, much faster? Wouldn't that be phenomenal? So we're saving interest, we're creating assets, and we're creating, at the same time, we're creating a financial vehicle that has a interest accrual that allows you to create a bank so that you can fund future purchases, vacations, dreams that you thought may never be possible for you. So let's imagine this. It gets better. If we were to build this bank for yourself, your own personal bank, and it's accruing interest, not 1%, but it's accruing interest, and you take that loan out to pay off that car, or you take a loan out to take that family on that vacation you never thought that you could go on, guess what? That money, that $5,000 for that dream vacation, it's still earning interest while you're spending it. Think about that. So let's talk about where that comes from. This is not a new concept. We always talk about, the 10% of the wealth, or 90% of the wealth going to 10% of the people, right? So let me ask you this. If you're sitting out there and you're listening to me, pretty sure some of you have heard the name Walt Disney or the Rockefellers, Pampered Chef, Ray Kroc started McDonald's, Berkshire Hathaway. These are just some of the names that have utilized this vehicle going back about 80 years. It's only been available for most of those 80 years to the wealthiest of the wealthy. This is like the elite wealthy that have utilized this vehicle, this option, this what we call infinitive banking, to build their wealth. In fact, when our markets were crashing and everybody else was struggling, their wealth was growing exponentially because they were able to borrow from themselves to continue to build their financial legacies and their empires. So what if we could do that for you? We can do that for you now. We can take money that you're already using and spending, inefficient dollars, and we can start building that bank for you to quickly pay off that debt, increasing the value of your assets to you and your family and your legacy, saving interest, putting that back in your pocket, and building a cash value that will allow you, or a bank that will allow you to do things in the future you've never done before. Now, let's put the icing on the cake. What if I told you, remember that 401k we started talking about that's so expensive? Once you retire, you work hard for it, now they're going to take a big chunk. And that big chunk, by the way, isn't even covered by that employer match. So let's talk about that. Well, let's think about that. But this bank we're building for you, it's doing all these phenomenal things for you. It's protecting your family. It's building a financial legacy. It's fulfilling dreams that you may never think that you could have. And it's also 100% tax-free retirement. It's also 100% protected from any kind of market fluctuation. It's protected from any kind of outside event that might happen. This money literally becomes your financial legacy. It helps your family, it helps you, and it allows you to control your financial future. This is not something a lot of us experience. We don't understand negative credit, or negative. What's a negative credit? Negative credit is consumer credit. It can be very harmful. And what happens is people end up in a hole. We end up with a pandemic where people lose jobs, they can't make payments. And now what, right? Potentially losing that home, or potentially losing that car, credit being, trashed because they can't make payments. If we were all in a situation where we had our own bank in 2020 during this COVID pandemic, would it matter if we lost our job? Of course it would matter. But what if we had that nest egg to protect our investments? What if we had that nest egg to be able to pay our bills? And better yet, what if we didn't have the debt in place that would create such a harmful situation for us, in that we're at risk for losing things? So I am a huge advocate of helping people figure out what real debt is, figuring out how to eliminate debt more rapidly. And here's the thing, guys. Out there are all kinds of programs. Credit consolidation, you can get loans to consolidate, you can refi your house, pay off your debt. However, all those things have a long-term impact. Credit consolidation is worse than bankruptcy on your credit. That's just information. Know that. Do your homework. If that's something you're considering, really know who you're talking to, whether your best interest is at their heart, or whether their best interest is. Because they make a lot of money. The creditors pay them to get their money faster. And then it's very destructive to you in your future financially. So be careful if this is an avenue you're going down, or better yet, you can talk to me for free and I will show you a different way. Because here's the thing. This is you paying your debts, but using your bank. You're accumulating your own money. You're growing it rapidly and with a high enough interest rate that you can pay off your debts more quickly. Now imagine if you're paying off your own debts out of your bank, is that affecting your credit negatively? No. But here's the other aspect. What if in the future you want to finance another house? You want a vacation home. Rather than trying to figure out how to finance that or come up with that down payment, you're accruing that in your own bank. There are so many possibilities. Open up your mind, open up your heart to the concept that you too can be financially solvent, that you can provide your family an amazing life, and that there's a light at the end of the tunnel. debt is a long, dark tunnel. And I get up every day really blessed and super grateful that I was provided this opportunity to be a part of this. This is very, not very many people even know about this or do this. So I get very excited every day that I get to help a family figure out a way to have something more, to have that hard work that they put in, have those 3 jobs pay off. Because here's the thing, I know people are thinking right now, what's this going to cost me, right? Sure, there's an investment, but that investment is up to you. We help you determine what you can afford. We also try to utilize money you're already using. So let me ask you this. If you could pay off your home and all your debt and save that interest, which is now money that you're not spending every month or in every year, and you could create assets instead of liabilities, and you could create a savings to increase the quality of your life and your retirement tax-free, would you be willing for 2 years to make sacrifices in your life? Maybe you turn off the cable. Maybe you don't go to Starbucks every morning. Maybe you take the family out to dinner twice a month instead of 4 times a month. If you made those sacrifices for 2 years so that you in the future would not have to think about whether you can afford to take your family to dinner or whether you can afford to take them on a vacation, wouldn't that be worth it? Worth it to me. Short-term sacrifices creating long-term gains. So I get very, very passionate and very, very excited about strategic wealth accumulation tactics because every day we are here showing families, showing small businesses. Are you an entrepreneur? We can do this for your business. We can build your bank so that you can finance the growth of your own business yourself. Has your business accumulated debt in 2020? Have you struggled? We have solutions. We can help you. So I'm gonna kind of close it off there. I know there's probably a lot of questions and people are curious about a lot of things, but I'm here. I'm here 7 days a week, loving to talk to people about this. Every other week, I do a full webinar on Thursday evenings on just this particular strategy. And then if you're, and maybe you're close to retirement and you have that money in a 401k and you're thinking, would this work for me? If this is not something that is going to work for you, we have many, many other strategies to protect that money, help it grow, and make sure it lasts the rest of your life with a quality of living. So I thank you all for listening to me today because this is like my passion, my love, and I hope to hear from some of you so that I can too help you live that debt-free life.